Warren Buffett's company, Berkshire Hathaway, bought its first shares of Apple in Q1 2016. The company continued adding to its position through 2018. After selling some of its shares through 2020, Berkshire reignited a buying spree of its favorite stock in 2022. At the end of Q2 2022, Berkshire owned 895 million Apple shares, making up nearly 43% of the company's stock portfolio. Alternatively, the stake represents about 22.5% of Berkshire's market cap and about 5.6% of all outstanding Apple shares. The stake makes Berkshire the third largest shareholder behind index giants Vanguard and BlackRock. Regarding Apple, Buffett has remarked that it's probably the best business he knows of in the world and that the iPhone is a sticky product that keeps people within the company's ecosystem. Those comments speak to Buffett's voracious appetite for Apple shares, but what does he mean by sticky? Before we get into the news, I would like to welcome you to my channel. On this channel we look at the latest news surrounding Apple news. I would like to announce a giveaway I will be hosting. I will be giving away a $50 Amazon gift card, and all you have to do is subscribe and like the video and make sure you watch till the end of the video. Now let's get into the news. The iPhone's history of fanciful design, advanced cameras, and innovative features has helped the smartphone attract a loyal following. The iPhone commands roughly half of the US smartphone market and 17% of the global market. Making it cool is one way to design a sticky product, but there is more to the story. iPhone users will gladly tell you about the services included in the smartphone's ecosystem. For a small fee, users can store pictures and other data on an iCloud account, download songs from Apple Music, and set up touchless payments with Apple Pay. Buffett may think the iPhone is sticky, in part because he believes that once a customer builds a lifetime of selfies and family photos, they're more likely to buy another iPhone when the time comes. Otherwise, accessing pictures becomes a cumbersome process if customers switch smartphones. Likewise, iPhone customers who have taken the time to connect their bank accounts and cards to Apple Pay will have to reconnect each one if they switch to a competing smartphone. Apple's ecosystem creates a flywheel effect whereby the iPhone's popularity begets services, and those services beget the next iPhone purchase. As Apple collects new iPhone customers over time, its sticky flywheel ecosystem strengthens. Here are some numbers that back Buffett's comments. The company launched Apple in 2015 with 6.5 million paid subscribers and reported 78 million in June 2021, implying annual compounded growth of greater than 50%. Morgan forecasts that Apple Music will reach 110 million paid subs by 2025. Meanwhile, Apple Pay dominates mobile wallet payments, representing 92% of mobile wallet payments in 2020, when the COVID-19 pandemic opened the floodgates for contactless payments, which are expected to grow by 29% annually through 2028. The iPhone's compelling combination of untamed popularity and entrenching ecosystem was demonstrated in Q2 2022 smartphone industry analysis. It showed that sky-high inflation and macroeconomic uncertainty reduced year-over-year smartphone shipments by 8.7%, which was short of estimates. Bucking the trend, iPhone shipments grew 0.5% in the quarter. The first quarter was even more eye-opening. Global shipments fell 11%, but iPhone shipments increased 8%. Though Buffett has touted the stickiness of Apple's products, the economics of Apple's services segment is staggering. For instance, due to its captive audience of loyal iPhone users, Apple can push Apple Pay, Apple Music, iCloud storage, and other services for virtually no cost. On top of that, there is very little ongoing cost to adding new service customers. Therefore, each new dollar of revenue increases margin. In 2017, when Apple first disclosed financial results for its services segment, it generated $32.7 billion in revenue and a gross margin of $17.9 billion. By 2021, services revenue had roughly doubled to $68.4 billion and gross margin grew 2.6 times to $47.7 billion. The implication for investors is that as Apple's services business grows, the company generates more cash, a trait adored by Buffett. The stock has fallen 13% this year and trades at a price-to-earnings ratio of 26 times, which has come down from highs above 40 in 2020. Interestingly, the multiples Buffett paid for Apple stock in the first 2 quarters of 2022 were visibly higher than when he started accumulating shares in 2016. But Apple is a company that increases in value over time. Value and growth investors alike should see the stock's tumble as an opportunity to emulate the world's most renowned investor by adding Apple to their portfolios. Apple has overtaken Android devices to account for more than half of smartphones used in the US, giving the iPhone maker an edge over its rival as it pushes into sectors including finance and healthcare. The 50% landmark, the iPhone's highest share since it launched in 2007, was first passed in the quarter ending in June, according to data from Counterpoint Research. Some 150 devices using Google's Android operating system, led by Samsung and Lenovo, accounted for the rest. Operating systems are like religions, never significant changes. But over the past 4 years the flow has consistently been Android to iOS, said Counterpoint's research director, Jeff Fieldack. This is a big milestone that we could see replicated in other affluent countries across the globe. The numbers are based on smartphones in use, known as the active installed base, what Apple Finance chief Luca Mestri dubbed the engine for our company in a July earnings call. This is a wider and more meaningful category than new phone shipments, which fluctuate from quarter to quarter and have already demonstrated Apple's newfound strength. The active installed base takes into account the millions of people brought into Apple's ecosystem through the used phone market, as well as those who use iPhones purchased years ago. Ben Wood, analyst at CCS Insight, said, "It's not that we are seeing a big year where Apple grows its market share 10 or 15%, but there's this slow burn where they quietly just grab more share every year." Android-powered smartphones first went on sale in 2008, a year after the iPhone debuted, and overtook the iOS installed base in 2010, according to NPD Group. In the 3 previous years, Apple never had anything near 50% market share, as sales were dominated by Nokia, Motorola, Windows, and BlackBerry. As Apple chief executive Tim Cook prepares to unveil the iPhone 14 on Wednesday, the milestone suggests the company has never been in a more competitive position despite persistent criticism that it has lost its innovative edge. The group's keynote autumn event in recent years has been much more about developments to existing gadgets rather than company founder Steve Jobs' famous One More Thing product launches. Apple is expected to unveil the new iPhones at its first in-person event since the onset of COVID-19 in Cupertino, California. Analysts expect better cameras and a smaller notch in the display where sensors are held, plus a more rugged version of the Apple Watch. Under Cook, the iPhone, a disruptive product that spawned entire industries, has made Apple the largest company in the world, with a market capitalization of $2.5 trillion. Cook has taken what Jobs gave him and has built an empire out of this, Wood said. Because anyone who buys an iPhone, whether it's second-hand, third-hand, or fourth-hand, will probably give Apple some money buying apps, paying for iCloud, using Apple Music, or transacting on Apple Pay. And that's a model that no one else, really, has been able to replicate. With iPhone penetration reaching saturation, Cook has pushed into movies and TV, advertising and payments and fitness and health, leveraging an installed global base for iPhones that surpassed 1 billion in 2020. The result is a diverse set of services revenue that consistently grows in double digits and delivers profit margins north of 70%, 2 times the profitability of its hardware business. The number of people paying fees to this array of services reached 860 million in the June quarter, roughly double the number of Netflix and Disney Plus subscribers combined. Analysts saw plenty of room for Apple to increase its market share given how the rest of the world remains Android dominant, largely because of its variety and lower cost. Cook recently said the group had set a June quarter record for switchers, consumers leaving Android for iOS. That's it for today. I hope you enjoyed. I would appreciate it if you could subscribe and like the video as it will help out the channel a lot. Make sure you do not forget to turn on notifications by pressing the bell icon so you do not miss the latest news surrounding the latest Apple news.